We commissioned a study. It was released in the beginning of July. It was pretty comprehensive. It's the first industry report, I think, that examines the investments that distribution has been making and the capabilities that are now emerging. We talked to many folks in the industry across both US and Europe. Many folks on this phone, I think, were interviewed for it. So if you go to the next page, Adam, there were 6 things that that we basically concluded, and I'm not going to go through each of them. You can read them, but if you look at number 5, I think that was a really key point that everybody knows, but we spent a lot of time talking about how critical distribution is certainly in the environment that we're in today. And you could argue it's always been critical, but with technology getting more and more complex, nobody can bring it together better than distributors, and we highlight that in the report. So it's available on our website. I'm not going to go into any more of it. You all can download it, read it. Love input. If you have any thoughts on it, get it to Kavita or Peter or I, and let us know what you think. It will continue to look at things like this. We'll continue to provide our viewpoint on critical areas, and so more to come. So with that, Adam, let me turn it back over to you, and let's go through the slides to see what's going on.
So thanks very much, Frank, and thanks to all the GTDC for providing this platform. It's a tremendous platform, and it's great to see so many people from senior in the channel attending today's call, knowing that many people have got holidays coming up, etc. So it's great to be here. And I'm going to give a review of Q2, but also the main thing is to look at what are the trends going into Q3, and also share with you our guidance for Q3. So that's going to be the outline of what I'm going to be speaking about today. And I'm absolutely delighted that when I've finished, we'll get some input from some key distributors, because I'm really curious to know what people are seeing from different parts of the world, and to know what your sentiment about Q3 is and the rest of the year. So just Q2 was remarkable. We started off with a 3.3% decline in July. We then went to a 15.6% growth in June, a growth number which most industries would dream of having, which came up with an end result of 4.9% year-on-year growth. So as Peter indicated at the very beginning, a really amazing performance. And also what Frank said, the adaptability, the getting of the product to end customers in all the difficulties that have existed, aided by growth in demand in certain categories, has been really a remarkable performance. And I think we should talk about it more because it's a great story, and it goes completely against, we're talking about a quarter when, the majority of countries, their GDP was in the sort of -15%. UK is going to be -20% year on year. And if you apply the normal criteria of 1 or 2% better in the IT industry than GDP, that means we should be looking at a sort of 13% loss. But in fact, that's not at all the case. The IT industry has done really well. And if you look at it, it really is a story of mobile computing, which has been incredible. It's been growing at such a high rate. It was growing at 40% in the latter part of the quarter. It ends up at just under 30% growth year on year. So that's mainly notebooks, but also tablets have done very well. The audio video systems, things like headsets, mainly headsets, in fact, have grown at the fastest rate. Other areas have done creditably and well. Some of them, like desktop computing, have gone in reverse because we've seen that it's really been a significant change. The desktop has suffered a lot as a result of the pandemic, and also the enterprise categories have suffered. So we've seen the value side of the business going down over the course of this quarter. If you look at the winners and losers in the top 25 vendors, you'll see that those providing mobile computing solutions have done really well. Dell, Lenovo have done extremely well. Acer and Asus have picked up quite a bit of market share. They'd been going down in the channel for some time. You'll see that some printers have done well. Canon and Epson really picked up some of the growth there. AMD has done exceptionally well, picking up the processors. This is their sale of processors through the channel, 156% year-on-year growth. And so they've had a really, really good performance. You can see some of the channel players in enterprise have had a challenging time. Cisco and HPE have gone backwards, and IBM as well. But overall, this is the picture of the top 25 vendors. And just to cut through to the chase of what we're saying, I'm going to develop this later on. We're looking at growth of between 1.5% and 4.5% in Q3. So the central case is 3.5%. So we have seen quite a strong demand in July, and all the indications are that with particularly government investment, it's going to really help the EMEA channel through this crisis. But I'll take you through that more in detail when we get to it. And obviously, I am really looking forward to hearing what you have to say, because who knows? I mean, there's a lot of uncertainties in terms of what's going to happen in the coming months. So these are the impacts on Q3 trends and outlook. This is where we're taking our data from. Okay. So first of all, we have this revenue index, which we've created. And what we've done recently, actually, is we created an index which goes right back using the 2019 data. We've taken 4 weeks average sales in 2019 as the basis of our index. And we look at it, when we want to look at the big picture, we're looking at 13-week trends. And what you can see here is, this is Q4. Okay, so there is a typical growth of activity in Q4, which takes place. And these are the different countries. You can see the color scheme at the end there, okay? What you can see is big growth in Q4. What happened at the beginning of Q1, which is here, is that it really started off pretty strongly, even pre the pandemic. And then we see the pandemic descent, which happened for most countries. Some countries navigated it really well. And you can see, for example, here that the UK did pretty well and managed to stay close to the 100 mark throughout. And there are others which have done pretty well throughout it. But there are also those that really suffered, like France, which went down into a pit, and also Italy as well, that went very, very low. But the good news is that there is a tremendous recovery which is taking place now. And what we're seeing is that the countries are getting back to their base 100. And of course, this is what you would expect when you think of the growth which we've seen taking place. These microscopes are where we've done our previous GTDC context reviews. What you can see is that in terms of volume, there's been really, this has been the powerhouse of the growth of the 4.9% that I showed you. So this is products like mobile computing and telecoms. And you can see here, we are seeing some slight downturn in the UK and Ireland and in France in the last couple of weeks. So we're watching this closely. Germany is sticking very closely to the 100 mark. Some countries like Spain and Italy seem to just be performing remarkably well and on all cylinders. But we're watching that. The key, one of the keys to the success of Q3 is going to be the sustenance. We don't think it's going to be growth at the same level as we've had in Q2, but definitely the sustenance of growth in mobile computing is going to help Q3 a lot. And what we can see is that the value business, which really suffered, it was below the 100 base mark, which is the average of revenues of 2019. What you can see is that we've begun to see this kind of going above the 100 mark, the UK and Ireland, France, Italy. So that's pretty encouraging. We're still seeing some of those core categories like servers and storage and networking. They're still suffering, but we are at last beginning to see a growth in that value business. So now I'm just going to share with you a little view of the categories to show which way they've been going during this crisis. And what you can see, this is the most recent data. So this is 4 weeks of the latest 4 weeks up to the 19th of July. Compared to the prior 4 weeks a year ago, and all at fixed exchange rate. And what you can see here is that the mobile computing, which is strongly in growth, is going down very gradually. So it was at 43% in June. In the last 3 weeks, the 4 weekly numbers have gone from 28 to 24 to 21. So you can see a sort of gentle decline in the mobile computing numbers. The telecoms one's similar, from 24 to 21 to 17. Computing components have been a really successful part of the channel during the last few months, with things like motherboards and graphic cards leading the way. Disk storage has been suffering, as have printing consumables. We see a slight turnaround in software and licenses recently. Software and licenses are a real mixture between those that are growing, like virtualization software, and others like graphic software, which have been going right down. So it's a real mixed bag, the software and licenses, but an encouraging increase in it overall in the last 4 weeks that we're looking at. And here, of course, you can see the desktop computing looking pretty bad. So that's down in the cloudy quadrant. The cloudy quadrant down the bottom means that it was growing last year, but it's going down this year. The sunny quadrant, growing last year, growing this year. And so each quadrant reflects how the particular sector is doing this year compared to the prior year. When we look at categories, we see web cameras right at the top there. In fact, it's way off the scale because it's growing at 200%, but we kept it in its own little world. Motherboards, you can see growing really, really well. You can see headsets and headphones, although it's growing really, really fast, it's actually growing less than last year. So it made, I plunged into the data to see how on earth last year it was growing faster in headsets and microphones. And in fact, what it was that Apple's revenues doubled in 2019. Introduction of new products. I guess it must have been something like an AirPod or something like that. But in any case, Apple's revenues doubled from 10 million to 20 million a year. That's why last year they were doing particularly well in that category there. The virtualization software here, you can see, has grown from, in the last few weeks, from sort of 20% growth to now 36% growth. So that's looking encouraging. I'm sure that's the basis of a number of projects which have probably restarted. And so that is encouraging. And you can see another one, graphic cards, growing well there. Last year they were not growing. This year they are growing. Motherboards growing very, very strongly. Monitors have been a big part of success, very strongly linked to notebooks as well, and tablets, which I mentioned before. And then we get on to those areas which are suffering the most. So we've mentioned desktops, servers are doing pretty poorly, as you can see there. We did a deep dive into an element of RAM. We found that the gaming RAM is doing really, really well, 40% growth. So even though the overall RAM memory is going down, there are parts of the RAM category which are doing pretty well. Large format displays, toner, all related to the closing down of enterprises, the furloughing of businesses, obviously causing a real drain on those categories there. One of the key factors for the next quarter is going to be how quickly they recover. Just one slide on channel health, which I think is really important. People really like to see these stats. And what you can see is that resellers really went down in April in terms of, this is the number of resellers through the context database that distributors sell to each month. And you can see how much they went down in April. They went up in May, but in June, 3 of the countries are really back to normal. So France, Spain, and Italy are back to normal. Germany and the UK are still down. So this is, in the UK, it's definitely down to furloughed businesses, and we're hearing also potentially businesses that have stopped, entirely gone out of business. And corporate resellers have picked up a lot of the slack in the UK, which is pretty positive. This just shows the channel and how each of the different areas are doing year on year. And what you can see here is that corporate resellers have taken a bit of a hit, and retailers have done really, really well in Western Europe. And if you look at it on a country by country basis, the most interesting thing here is, in fact, the SMR resellers in the UK, minus 18%. They really have both lost market share to corporate resellers, and also a lot of them are still furloughed. Other countries, they've sort of recovered. And you can see the corporate resellers country by country. Some of them are really suffering, evidently related to some of the corporate business. So now I just come on to the Q3 guidance. So we gave guidance of decline of between -2% to -6%. So in our defense, we did it in April at the bottom of the pandemic, and we never imagined mobile computing and telecoms would be so strong. And so when you look at the difference in what we gave as guidance and what actually came out, you can see it's really in that mobile and desktop computing, which is such an important part of the channel business, and it's growing at this remarkable rate of 24% year on year. We got infrastructure and security right. We got telecoms really wrong, and the rest of them, we were a little bit too pessimistic. We weren't the only ones, but obviously it's good news that in fact the channel really recovered, and particularly the month of June was remarkable. So for Q3, this is what we're seeing, and this is where your feedback would be great. We're seeing notebooks, telecoms, home working, and components being the sources of growth. We're seeing a reversal of the negative trend in infrastructure. It's still going to be negative, but not as bad as it was in Q2. Printing and consumables still down, no big growth in services. And then we have other thoughts, which is, yeah, the businesses are furloughed at the moment, and they will be until October. So we see Q4 as really impacting consumer demand when a lot of those people are taken out of furlough, and probably unemployment is going to go up a lot in Q4. August is going to be August. We think people are going on holiday. I am, and I think lots of people are. Variance by sector. If you happen to be working for the government or healthcare, you were lucky. If you work for any other sector like hospitality or entertainment, then your business, no matter how good your supply chain was, there was going to be no activity in it. How much is back to school going to help? We think it could be a big one, as well as the government investment in education. There's a lot of overstocking at the moment, particularly in desktops. We're going to need to find a solution to clear those out. We're hearing a lot of pain at the moment from that overstocking. Distribution is doing really well. Hearing that from people providing finance and support to their resellers, and really helping in this move to cloud that Frank mentioned earlier on. Which brings us to this is our guidance. So we see this is June, this is Q2, and this is Q3. So we're still in growth in mobile and desktop computing. That's a plus in mobile and a negative in desktop. We're better in infrastructure and security. Telecoms, a bit less strong growth. Printing consumables still down. And computing components still strong, not quite as strong, leading to our central case of 3.5%. I hope that's a provocation to everybody, because I'll leave you with that and hand over to Peter and any questions that you may have.
Thank you very much, Adam. Very helpful, very useful insight. Yeah, as I said, I'd like to also put on a few distributors to at least get their view on what they see in their markets. So to actually context is seeing 3.5% growth, which is, I think, optimistic, but yeah, now based on July, it's what we see. Yeah, Anton, maybe start with you. How is South Africa? Because your numbers are not into the numbers from context, but is this what you see in your countries or your regions?
Yeah, I think I've just got to create context for South Africa because remember we were already in a recession effectively before COVID. So the economy didn't look good, and the forecast for us in the first quarter and for the rest of the year was to have sort of a shrink in the IT industry of about 3.5%. What has happened is that since COVID has happened is we've also been downgraded from a Moody's perspective, from a country sovereign risk perspective, and all of those things playing together we had a very rapidly depreciating currency. So not only did we have COVID, we also had our prices going up, rocketing up. Effectively, the whole country was in lockdown for April. So if you look at our trade in April was near naught in terms of the distribution market. But having said that, we recovered very strongly in May as the economy opened up. And I think in May, the economy was trading at about 70% of the economy was trading. And we averaged out between the 2 months on a normal month, if I can put it that way. We're seeing exactly the same trends as what you are seeing in Europe in terms of what's the mainstay of the industry. The mainstay of the industry is basically mobile compute, telecoms because of a need for connectivity. And then I think the other thing that is really ramping quite rapidly now is at the expense of, I think, the infrastructure and services business or server business is the Azure and Amazon plays in South Africa. So the cloud is really growing at pace. Our Azure growth this year, if I look at Microsoft's fiscal this year, is around 80% year on year. In a market that is flat to negative. So if I had to measure our market in dollar parity terms, I think we're probably down about 8%, which mimics what the economy is doing. Our forecast for the year is that our GDP will probably shrink by about 8% this year. So it's a tough market. Q2 held its own, I think, relative to Q1. But having said that, in local currency, that's okay, but in dollar terms, it's not. So, and what is happening is we're seeing a shift. Definitely what you're seeing in Europe is a shift from the channel to retail. The consumer split is happening, and what COVID has done is it's actually accelerating the move to online retail away from physical retail. So those trends are the same. The concern for us is that we're seeing a decline in our corporate reseller and our SMB businesses every month. As the economy bites, it's hitting the SMB markets hard. And as Adam said earlier, what we're finding is that people that has got their core businesses in the aviation, tourism, hospitality, all those sectors are actually toast. And we're seeing our resellers feeling it in that space as well. So if we had to ask our reseller channel what's the health of their channel, they think about 30% of their business is compromised. So it's high. And we don't see, because we are still in almost reaching our peak in the pandemic, as I said earlier. I think we are still in for some tough times economically. So Q3 for us, Adam, if I had to take a stab at it, on a dollar parity perspective, I would see a shrink of about 2 to 3% year on year, if we're lucky. But the mainstay, as you say, is compute. We see the same trends in all the other categories. Yeah, that's sort of a summary of what South Africa looks like. And with South Africa being the mainstay of Southern Africa, I think you'll probably find similar things happening with our neighbors, because they are tightly linked to what happens in China. And as the Chinese recovery comes, I think we might see a bit of an uptick. But what we don't see is that the stock markets doesn't reflect what's happening in the economy, that's for sure.
Okay, well, thank you very much, Anton. It's helpful. I'd like to change to another part of the world. We have Martins Oterlins from Elko on the line as well. Elko is having their business mostly in Russia, Ukraine, and I think Baltic, Sweden. So Martins, anything from your side? Any comments?
Hi Peter, and hi guys. I hope you can hear me well. Yeah. Yeah. As you correctly said, we are predominantly sort of a hardware still and on the volume side of the business. And as you said, we are the biggest part of the business is CIS, and then we have some CE and some Nordic parts, right? And as I was looking through the presentation, I was basically thinking from what Adam showed that we are sort of lucky to be right in the right segments of the business to kind of capture the good market situation. And it's been really good. Our business is about 1/3 in smartphones now and about 1/3 in components. So the rest is scattered across, and those categories, as you also see in the market, are growing, and we're going very well with that trend. There are some specifics between the regions. Sort of our Q1, Q2 situation was that Central Eastern Europe was mostly flat. Baltics were on a high rise, growing about 1/3 against last year, and CIS was also on a kind of good growth path. Q3 is good again, but Q2 was tough. Let's put it that way. So when there was April, May, the CIS part of the business was tough. Most of the retail was shut down, I think, across the territories. The clients were struggling. We got very good help from the biggest vendors. They were supporting us and being very responsive to the kind of requests we put out, and many thanks to them for that. As we now sort of looking as the Q3 is starting, we see that this kind of CIS situation is turning around. So Q2 was flattish in CIS against last year, so still not a drop, but flattish. But then Q3 is again back on trend, and we're growing double digits. Baltics are growing sort of plus 50% against last year, so we're basically slightly surprised ourselves how well is that going. CE part remains flat for us. Nordics in our portfolio are growing triple digits in all the past quarters, but that's a little bit of specifics, right? We did an M&A there a couple of years ago, so we're sort of still plugging in new products in the portfolio. So I wouldn't say it has directly to do something with the market developments. But then, as I said, sort of overall situation is the sales pipeline continues to be strong, and we're doing well, and we hope that this situation continues. If we look a little bit on the sort of a product split, then I think again no surprises, as you already sort of pointed out. The components Q2 was weak, but that's mostly due to the CIS part in our portfolio. Now it's getting back on track. We see especially good developments in the gaming components part, as you already mentioned as well, Adam. Gaming RAM and those kind of products. Server storage is also good, and that probably has something to do with the fact that we have quite a few data centers in our client base who are expanding at the moment. So that's been helpful for us. Smartphone business growing basically 50% year on year. So we're doing very good in that front. And then a bit more sort of our specifics, I would say, on the home electronics parts, it's monitors and networking, also obviously related to people moving on the remote work. And then we have a category which is probably less IT related. So we have what we call ourselves the small domestic appliances, which is more vacuum cleaners, microwaves, and that part of stuff, which is also related, I think, to people changing the habits in life. Client base related, also no surprises. I think it's the same as everywhere else. Retail, e-tail doing very strongly. Corporate resellers weaker, but also sort of coming back. We see in our markets.
Yeah.
I would say that's pretty much how it looks from our side of the pond.
Okay. Well, actually, pretty good picture, I think. And well, Adam, in line what you're expecting, you're saying, actually. I'd like to switch to a different category, security. Well, we also have Klaus on the line. Klaus with Infinigate. Infinigate is a security distributor, I should say, Klaus, is that right?
Yeah, that's correct.
Across Europe. And
yeah.
Yeah, also interesting in your views.
Yeah, it's a fairly easy picture to describe. I mean, you're only in cybersecurity, which is a niche market when you take the big IT picture into consideration. Q2 was flat, but what was really astonishing was that the mix changed completely in terms of customers, but also in terms of products. Basically, all the enterprise projects, they hibernated in March and April because the big corporations basically stopped a lot of cybersecurity projects and moved them out. But what was very strong was actually the SMB market with the home office move, where we had a huge uptick in with those mid-sized customers and with products around home office, VPN solutions, and authentication. And that is a more healthy business than the enterprise projects, obviously. So it was a good quarter, but the top line was flat. In Q3, I would expect, and we see that already, that those big enterprise projects are coming back, and the top line will be growing again 20% as it did the last couple of years. But the mid-sized business still stays strong because the whole home office rush and this authentication rush is still happening in the mid-sized businesses. So for Q3, I would expect, again, the typical 20% growth in the cybersecurity area. So the biggest impact was really the mix of products and mix of customers in very short time frame, where we basically rolled over through a complete stop in enterprise business, which comes back now, and a move into the SMB business very drastically and fast.
Okay, good. Thank you. Well, I'd like to switch now to L Win. L is with Softcat. Softcat is the largest, or one of the largest resellers in the UK. I've asked L also to say a few words on what he's seeing in the UK market. L, over to you.
Yeah, thanks, Peter. Good afternoon, everyone from the UK. Thanks for having me. From our perspective, I won't give too many specifics away in terms of numbers, given the fact that we've got 2 days left of our financial year. So it's a bit of a frantic finish for us, and a very turbulent, interesting, H2 for us in the UK. Mirror really the comments from others on the call. March was crazy. Hardware went absolutely berserk with laptops and mobility, which people have called out previously. From then, our success and our peak points have really come from software. You've called it out previously, and Adam, you mentioned the mix and the variety of performance in that software arena. For us, we're seeing significant growth in cloud, productivity, and collaboration, to be specific, in that, which no surprises there. And equally, it was interesting to follow Infinigate as well, because security is definitely a big growth area for us, not in the initial period, but the follow-on demand that comes with that. With COVID coming, it's brought different ways of working, different ways of servicing your users, and as such, people are needing to protect their users, their networks, their data in new ways than ever before. So we're seeing a wave of demand. Again, a comment mentioned earlier of the hibernation of some of those enterprise projects. We definitely saw that. People focused on the protection of their organizations, the support and the immediate productivity to keep the wheels in motion. But we're definitely seeing some of those bigger ticket projects reigniting now. We have definitely seen the mix of SMB versus enterprise versus public sector. We've said from the early period really that we've counted ourselves quite lucky being in an industry that's resilient. We're counting ourselves even more lucky that we're in a company that's quite resilient, with a portfolio that's quite resilient and diverse, but equally our customer mix is quite resilient because we've got a fair spread across SMB. Those customers have been hit hard, so our younger generation of salespeople are definitely struggling and finding it tough because of the customer environment they find themselves in that regard. But our established account managers that have been in the business for quite some time, servicing the major accounts, enterprise accounts, upper mid-market and public sector, the demand has not softened. What they were dealing with, and the project demand has definitely varied in that period. Supporting the immediate needs, then adding the layers on top of infrastructure follow-up, which is now starting to come through the cloud evolution, the security and collaboration, and now return to work plans, return to office plans. It's definitely keeping us busy. So we keep fingers and toes crossed for a strong and successful finish. Definitely in line with Adam's expectations. It's not been significant growth of the level that we would expect previously, but the performance of the business we're happy with, we're satisfied with, and all business lines generally performing well.
Okay, well, thank you very much, Al. Well, I think we've reached the end of our call. It's I think 1 minute ago. So if there's any questions, feel free. Any questions for Adam or one of the other presenters or speakers? If not, then I think we'll finish the call. Well, Adam, based on what we're hearing, you have an outlook of 3.5% growth this quarter. I think we'll know more in 2.5 months from now. Based on what I'm hearing, it's you may be right this time. I think
it was very interesting to hear what Klaus had to say about the fact that he's got the mid-market and the enterprise activity. So that's encouraging, in fact, for Q3. So that was encouraging. Also, can I just ask Martin a question about the telecoms business? Are you seeing the same level of sustained growth? You said 50%. Are you seeing any tail off in that at all, Martins, or is that still being maintained for you in the regions that you're tracking, that you're in?
It's still sort of a going. I wouldn't say there's much of that, but I don't have a very sort of a strong or well-grounded opinion on this. So it's sort of going. It's sort of sustained the rate of growth over as it goes Q1, Q2, Q3. So it's being kind of consistent in that sense.
Yeah, because I mean we saw a big increase as soon as the retail stores reopened. We saw a massive increase in the telecoms, and it was as if there was a big pent-up demand from the weeks when everything was closed. And so we've seen a slowing down in our data. So we're just thinking, is it going to get back? Because I mean, it ended off in Q4 2019, pretty much zero growth, the telecoms category for us across all of Europe, and it has been a much stronger growth category.
I think if we would look at the specific vendor basis, then I might agree with you. For us, the case is rather that we are adding all the time some vendors to the portfolio. So we're expanding kind of portfolio wise. Okay. Overall, if we would look specifically, say for Central Eastern European business, for example, so it's flat on smartphones. At the same time, there are regions where we are growing, but that's not probably say market related. It's the way how we are developing the portfolio. So we're onboarding somebody new, and that's the driver of the growth. At the end of the day, it looks sort of consistently nice that the total growth is 50%, right? But it may not necessarily be sort of the overall market development. It's more how we are developing in that market.
Okay. Yeah. Thanks.
Okay. Well, I'd like to thank all the presenters and Adam, of course, with your presentation for all the work. Our next call, I'll reach out to you, but probably around 6 weeks or so from now, we'll do this again, and then hopefully know a bit more about this this current quarter, and hopefully it is as good as we're all hoping and seeing. Okay, thank you all, and speak to you soon.
Thanks, everybody.
Okay.
Wonderful. Thank
Bye.
you. Bye-bye.
Thank you. Bye.
Thank
Frank.
you.